one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best?
Discover crypto, Bitcoin, crypto, altcoin bulls. Did we just absolutely lock in what everybody's been waiting on? And that is the hunt for green October. Is it here? I have to cough out any bearishness that's inside me, because what we are seeing right now is something that we've been highlighting here on the Discover Crypto channel for the last, especially with my 4 p.m.s and a lot of the things I've been doing the last few months on the BitLab Academy streams, talking about the setup, the pressure that was building with the bulls that were just gathering steam as the bears started to lose their momentum. In addition to that, the bearish moves with downside price action, while other data was just getting stronger in favor for bulls to break out. And on that note, the hunt for red October, the hunt for green October has started. The hunt for green October has started, and we can see that here in the price action on the chart right here. Look at this breakout of this zone. Now, if we zoom out just a touch, just a tad, just a little bit, and not looking at just the tip of this pump here, but breaking down right here, this basically a bull flag that is formed from the move all the way down here at $74,000, pushing up, stepping up to where we're seeing the price action right now, and we are breaking out of this zone. So the question's going to be right now, is this a bull trap setting up for another move to the downside? Is the liquidity set up in a position right now that is suggesting it is all systems go to the upside, or is this going to wash people out, or is there going to be potentially even sideways price action? Because we got data this morning showing reduction in jobs yet again. And on that reduction of jobs, we have a further indication that we are going to get another rate cut. Because remember, right now, we've been in a quantitative tightening cycle for quite some time. We got a few rate cuts at the end of last year that saw the price rise in Bitcoin and altcoins. We saw that little mini altcoin season, and yet we saw the market sell off from there again, and it feels like it's over. And it's my estimation that we need to be a little bit careful here to not be so bearish, because we're worried about what the price is going to do. Now, I am not suggesting in any stretch of the imagination. In fact, I would recommend against not being risk adjusted. You need to make sure you're not overexposed in this market, meaning if the market does go down, you can't pay your rent. You don't want to be in that sort of situation. But when we understand what's coming, when we understand the situation in terms of the price structures in the chart and what has happened over this last year and a half that has built such a beautiful bull trend, and the fact that we've had these 7-month sideways, $17,000 to $20,000 oscillations, chopping the living life out of the bulls, chopping the life also out of the bears, until people stop getting so over aggressive on the leveraged and derivatives positions. Now moving up right into a known trend line. Oh my God, it rejected from a known trend line. In addition to the known trend line that we have there, we also had the bearish divergence that was set up into this zone at a known trend line. Also, a lot of open interest just flying at this point, chopping people out, testing back to a previous range high, pushing back up to the same known trend line at that same spot. Look, pushing higher through here. Bearish divergence setting up to their money sort of evaporating in the system there. So we could expect that. So what is different? Is there anything different about what we're seeing now with the price action now breaking above this trend line, finding support, bear trapping below, bull trapping back above, bear trapping back below? It's felt like over this last several months, especially over this last 130 days or so, like the market just will not give us what we want. Well, we have to remember, this market is not designed to give you what you want, to give the majority of what they're expecting. In fact, the market more regularly than not chops people, the majority of people out that are expecting something to happen in this market. And we've seen this over and over again, especially with these huge amounts of liquidations that have taken place in the last couple of weeks. Now, especially the last few days. But now with the reduction in jobs, the ADP data that we saw, and I know you've probably seen this on several of the streams today, but this is important because when we're seeing the price action, we're seeing the price action breaking out on this chart. This is a 12-hour chart too, on the daily chart, breaking out. We are at a couple key junctures that we need to pay attention to. So before we dive into this, I just want to welcome everybody. Welcome to the show. Welcome to the family. If you don't know who I am, well, welcome to the Disco crew. My name's Kelly Kellum. I've been running the BitLab Academy streams and the Academy for the last several years. I'm also part of the Hit Network family. I'm doing the 4 p.m. streams now. So we have live content throughout the day here on the Discover Crypto channels, YouTube, on X, on Pump Fun. So shout out to all the DJs there. So what we're looking for right now is, one, for you to hit that like button, hit that subscribe button, get engaged in the live chat. I want to see a GA for good afternoon, and I want to see the coin, the last coin that you either bought or sold, and then after that, put B or S. So for me, it would be GA, AVNT, and B, because I bought AVNT yesterday. I listed it in our Discord. That link is in the comments down below. I also added to that position a bit more this morning. So that's what I've done. I see Johnny December says Arrow. We got Mr. Mark Morpho buying Morpho. We got, hey, Moonwell. Moonwell's fallen out of some people's lens lately. So let's take a look at that later on in the stream as well. Also, Near, of course, a lot of love. I bought more George's Clash Royal. I don't know what that is, but shout out to your Royal Clash. But we got to get in here because we're getting some data right now that is suggesting we may be entering that super fun part of the market where we get those major moves to the upside. Now, the question is going to be, are you going to be around for it? Because when we look through, let me actually pull this up really quick, exit out of that, go to bookmarks. When we look through, and let me do Fred. I meant to do a specific video on this. This is very, very important when you're considering what we're doing in the market, because the market's had those multi-month chop periods that have just completely washed people out of the market. And when you look at the data over time from 2017 to 2024, the difference in the amount of profits people make if they're just hodling and not trading is plus 847%. If you miss only the 10 best days, meaning the 10 days that gave the biggest growth, the 10 biggest daily candles, if you were not involved on just those days, but you're involved every other part, you'd be down almost a quarter as much, almost 25% down, 23% less than you would have if you just hodled. If you miss basically a month, the top 30 days, you'd be down 84% from what you could have gained had you been hodling. Now, I'm not arguing for hodling here because I think you need to determine whether you want to make a lot of money in this market over a long run, or if you're just an overwhelming degen that trades every single move. I'm a bit of both. I day trade and I rotate my profits into my long-term portfolio. But you got to make sure you're making the right decision for you and realize that people get so frustrated in this market that they miss some key days because they're waiting for the market to move before they get in. And then they don't want to buy a top, and then the market just continues going. So when we understand that we're entering this phase right now, that is very likely going to be this Uptober narrative, the Moonvember narrative, the Bullcember, meaning bullish price action predominantly between now and the end of the year, you got to ask yourself, are you going to be around for it? Now, of course, there are some people that are still very fearful about the potential 4-year cycle, and this is going to top. It's already looking like it's toppy. Well, I'm here to tell you, and very, very much recommending the 7 p.m. video that I did that's going out this evening. Watch that video. I got some very key data, some very key alpha in there, some signal that I want you to pay attention to, and even some charts you should be looking at to help make sure that you can see the warning signs, that you can see the signal to make sure you do not get caught on the wrong side of this trade. Jeremy says, dog, hey man, I'm still holding, still stacking. But when we're looking at the charts, when we're looking at what's going on here, this was the gift from God buy zone. We have not moved down into that. We still have a potential possibility to do it, but it's looking more and more likely that the bulls are going to prevail here, especially considering many of the signals that I highlight in the 7 p.m. video, but also the things that I've been highlighting on a daily basis here. Michael Carter says, GA Kelly, H-bar to 122. Well, we'll have to take a look at that chart. But let's go through some of these things because there are some key points. there are bearish signals out there. As bullish as I am not a perma bull, and I'm not only looking at the bullish opportunities. So let's pay attention to this right here from Tony the Bull. Bitcoin just confirmed a bearish crossover of the monthly LMACD. Every time this has happened in the past, remember, every time, but also in the past, Bitcoin has fallen by 70% or more. So this means we sell everything we have in the market, right? Well, you have to consider, again, where we're at in the cycle. I think the cycle is different. The context is different. The capital access channel is different. The growing parabolic increase in Bitcoin positive exposure on mainstream media, in addition to the outlets and access points that big money can get involved, and the awareness that that's going to have an effect on where this cycle goes, especially considering looking at global liquidity and the business cycle. And there's so many things. I highlight some key points on the 7 p.m. video today, so make sure you take a look at that. So yes, we have crossed over bearish, as you can see here. If you can't tell it crossed, I'm going to tell you a bit of a secret here. You don't ever need to look at these lines, ever. Not once, ever. Not on MACD, ever. Okay? The reason is, and I'm not dismissing MACD, you can just look at this. This is called the histogram. What this does, the green and red waves, this measures the distance. This highlights the distance between these lines. So you know this crossed over bearishly because you see these bars right here. When you're getting bullish expansion, they're dark green. When it's starting to contract a bit, but still bullish, light green. Same thing, bearish expansion, dark green. When they start to contract a bit, but not yet crossed over, still in a bearish momentum, you get light red. So what we're seeing here, this flip from green to red. So you know these two lines crossed. Does this mean that we have to 100% expect that we're going to have Bitcoin fall 70%? No, it does not. This is something that we cannot dismiss. We want to have this on our radar because we very well could have some geopolitical, geo-financial catastrophe that does bring markets down. But this is on a day, today, when you come over here and you go back to the Bitcoin chart. No, let's go to the traditional markets chart. Okay, it is 413. I think markets are closed now. Yeah. We see that these have closed. Boom. Right here, all-time high. We just broke to new all-time highs in the stock market. We have Fed rate. We have the easing cycle that just started. We've got all this new capital is coming in the market, and people are worried that we've topped. Well, is this time different? Yeah, in some ways, and in some ways it's the same. But I don't want to dismiss this chart. It's on my radar. It's in my risk mitigation sort of mindset, considering it. But I think this is going to be more of a fake out. Now, in this case back here, 2019 into 2020, yes, it did cross right in the middle of the start of this bull trend. We did have a sell-off, but also in the middle of the sell-off, what happened? It could have just been a smaller sell-off, but we had the global economy absolutely shut down. This brought down all markets, not just Bitcoin. So on the one hand, you could dismiss this. On the other hand, this did happen, and it did play out to a 70% drawdown. So what I'm looking forward into this month, into this November, into December, is to be a bit careful in my bearish fear of what's going on in the market. And still, I'm still looking for opportunities when the market does have some pullbacks, because in my opinion, this is an extended cycle. And in my opinion, much like my shirt, Bitcoin is much better than the dollar. So even all the trading I'm doing in altcoins, even if every position I have in altcoin goes to zero, I'm stacking along the way into Bitcoin. So it doesn't overwhelmingly impact what my future is, because I have so much faith in where the Bitcoin price is going over the next 2, 3, 4, 5, 8, 12, 15, 100, the rest of our lives. So I'm looking for opportunities to stack. I do not think the 4-year cycle is going to play a key role. However, as I've said time and time again, I do think we will get a pullback sometime between, October-ish and January of next year. That's going to convince a lot of people that the bear market is there. The 4-year cycle is proven true. So we need just to pay a little bit of mind to being more mindful of what our long-term goals are here and the overwhelming bullish framework that this market lives in. Because look at this, we're nowhere near a top. Cycle top is nowhere near. This is looking at the Pi cycle top indicator, which has to do with the 360-day moving average doubled and the 111-day moving average. And what we're seeing is every time the cycle has topped, is when these two lines have crossed. Boom. Also happened right in here. It also happened. Boom. See the little red dot? If I zoom in on that, that's the cross of these lines right on the top, right on the top. Now, yes, this was the top that we can go into. That's a whole dissertation we can do about these two tops, but this did mark the sentiment top of this market as well as theoretically the top of that cycle. Look how far apart these are. We have not gotten any of the explosive growth that everybody's waiting on. In addition to that, we've had a big turnover, a very large turnover in the last 6 months or so of older players selling and basically creating the liquidity opportunity for OTC, for over the counter, for these large bulk orders and buying swaths that have come out of like Metaplanet and Strategy and other corporate treasuries, as well as big money players buying in. So when we're looking at this, has it really marked that we're about, top worried about top in that regard? And the reason why that's important is because we historically have seen when you have a huge amount of old coins getting sold, you can see it in the on-chain data in a variety of different ways. One of those ways is value days destroyed. If I have a coin that I've held for 7 years, count every day for that coin, and that's a value day for that coin. So if I have, let's say, 5,000 Bitcoin I've held for 7 years and I sell all of them, that destroys a lot of value days. You're seeing essentially a huge spike in the amount of old coins that are moving, in addition to younger coins as well. So when we're looking at this chart right here, and I shared this before in BitLab Academy, I've shared it on the streams. This is one of those ones I'm really watching to identify the worry zone we need to be in. So full bull, just like the chart shows today, the bull run activated. We have been in a very beautiful bull run stair step to the upside. But what everybody's wondering is, do we get that parabolic move? Well, the may or may not come in the Bitcoin ecosystem this time. I still am of the opinion that it will. But what I'm more concerned with is not where's a parabola. Where are there key signs and signals that I need to be paying attention to that maybe I need to be worried? And I'm not seeing them right now. Okay, Pi cycle is great to look at, but this is just moving averages. Here's real data on chain. Real data on chain is showing when you get these very large red spikes, this is what I was talking about. The value days destroyed. A lot of older coins have been sold, increasingly selling into this top. This was that top that was before the halving. And what do we get? We got weakness in the market. Now, why would this be? This is why Bitcoin is so fantastic to also giving signal to the rest of the market. It's a great risk indicator in the crypto ecosystem because with the on-chain data that so many people ignore, I'm here not trying to cram it down your throat, but to make it just easily available to you. I want you to understand this. In the strength of bull trends, the strength of bull trends weaken as it goes higher because smarter money bought a lot lower and they sell into the strength of the bull trend because there's liquidity there to sell to. There's new buyers coming in. There's excitement. There's new retail. And unfortunately, this is how every single asset works, whether it's Bitcoin, whether it's a meme coin, whether it's the S&P 500 or a Vanguard index. People sell into the strength. The smart money sells into the strength of bull trends. Dumb money, unfortunately, and I hate to use that term, but let's say uncultured money, people that don't know markets, they don't believe in the market down here. They get excited once you've broken past previous all-time highs. And then you start getting all these mainstream news media things that so this guy made money, that guy made money. So everybody in those circles finds out. It's like, oh, you made that money? Well, I'm going to get in. You're buying after the majority of the move has come in. So what we're seeing with this chart and with on-chain data, when we look at accumulator addresses and we're following global liquidity and how that's respective to what's going on with price action, what I'm seeing here is a hue. The higher these get and the darker red they get, the more old coins are being sold. Okay? Old coins and a lot of coins. So you're seeing strength getting taken out here. Why is that? Why would I say that? More people are entering. Yes. But the type of people that are buying into the excitement of the move. So they do not have the cojones to hold through the dips. They only want to buy the rips. So what happens there is smart money that holds through the choppiness is taking profit here, selling to FOMO buyer bag holders. And the more that happens, the weaker the structure becomes, because now you have a bunch of people buying into emotion until you get this dominant trend where you have short-term holders and retail participants dominating the Bitcoin that's being held, aka then you get a sell-off boom into the bottom. Now, the difference here in this cycle that we need to consider is that the behavior on chain that we've seen, especially in this last year and a half, since the ETFs have come out, since corporations and institutions are stacking, and now governments are being very aware of what's going on, and some of them, not all, stacking and looking for longer term holds, right? Is we're getting a slightly different shape of the type of available liquidity on chain. So we might see some different structures moving forward, and everybody needs to be aware of that. Even the charts that I share and things I might have conviction on, every single person you're watching, whether it's on YouTube, whether it's content you're following on X, wherever you're watching it, people need to realize there is not really much legacy data that's set up in Bitcoin, especially in altcoins, and zero legacy in meme coins, okay? Because meme coins are such narrative-driven, momentary moves in those assets. What we need to realize here is, yes, we've had 3 cycles, great. That is not a data point you could base every single move on. So while this is showing us that, to me, we're still in a very strong place in the market for what's moving forward, and we're considering the 4-year cycle and all these different things, we've got to be very adaptable in this market, especially as the world is waking up to what's happening here. Eric Serrano says, what's up, Kelly K? What's up to you? Smash the like button, says Jeremy Bond. You were one of the first people in here today. Shout out to you. Meme Pool Pump, shout out to you as well. We got a lot of people in here. OG Grinder, how you doing? Raul 2.0, Julio, in Wizzle. I'm just, guys, we've been building into this moment in the market for the last, it feels like forever. I do think we're going to get a pretty big jolt up to the upside, and then I think we're going to get some sideways price action that's going to chop a lot of people out. I think that's going to be the new bear market, is sideways chop zones that slightly bend to the downside, like we saw last summer. I mean, we saw it case in point last summer in this market. And, zooming out on this, it's this, oops, where's my mouse at? There we go. This period of time right here, from March 2024 all the way through here till we finally broke past these range highs, which was all the way in November. So in reality, you could argue that accumulation took 239 days, massive amount of time, with swings that were, these were not small swings. Okay, let me pull up this because I have other images there. There we go. 30% move, $21,000 move to the downside. And then, also followed by let's look at that, a $15,000 move back to the upside. And this is over and over again. So even considering where we go next, we've broken out. We've broken out of this falling channel. Let's forget that it might be a bull flag. Let's just call it a falling channel. Cool. Falling channels tend to break bullish. And now we're also above this multi-year trend line. So what other signals do we have? Let's look at it. Well, we have the money flow, massive move up in the money flow that started it flipped right here. So the price started making its move, and the money flow really supported that. RSI's very high now. So what I want to caution people on right now, full bull, I do think is basically in process of happening right now in this sort of smaller term time frame. But with that being said, there's a very strong likelihood, or a realistic likelihood, that we do get a move back down. Oh my God, it's over. No, it's not. Every bull trend in any asset ever has rise, retrace, continuation. This is the area that wrecks so many people. I say it over and over again. This area right here is what overwhelmingly just multiplies your profitability in the market. Or if you're aware of that, maybe you don't buy every time you have a dip, but you realize there's dips, so you don't sell in fear. You got to outline what your strategy is, what the conditions are that you're going to buy or sell when you're entering a trade. What are the conditions that I'm going to sell if X, Y, and Z happens? Have that outlined ahead of time. So on a dip and none of those conditions are met, you're like, oh, okay, this, you can identify a buying opportunity there, or there, or even finally when you break past that, knowing that you're getting that continuation. But remember, yes, we are breaking out, but there's a real possibility that you could come down and test even down to this neckline area right in here. I mean, in reality, we got a bit of a angled trend line here, and it would be kind of like this. So, I mean, look at that, just randomly goes right to that level. So if this does come to this level, it wouldn't be the end of the world, even coming further back down into the 113 zone. But there's still a lot of liquidity below us because people get so over leveraged. They want to catch that move. So let me refresh this. This has been for a few hours since I've refreshed it, but notice there's a non-zero possibility that the price action still does roll over and come down here and scoops up all of this liquidity before it goes up. Now I'm on the smaller percentage chance of this happening, coming all the way down to 108. But you need to be aware when you get a huge amount of liquidity piling up in an area and the price is trying to run away, sometimes you get those reasons, whether it's market makers or that, and tell me, throw one in chat if you've ever felt like this. Sometimes you see something in the charts, in this case, all this liquidity that's below us, and out of nowhere, something happens on the geopolitical stage, financial stage, the news stage, whatever, that tanks all markets. And then you're like, well, we couldn't have foreseen that coming. And it happens. And it just so happens to take you where there's liquidity in the chart. Sometimes I do feel like I'm living in a simulation with some of the way these things happen. Keep wearing your crypto shirt, so that criminals can rob you at gunpoint. Yeah, let's be positive. I'm trying to be, sometimes you got to pre-screen some of these comments before you read them out loud. But there's some other things in the charts I want to highlight as well, because we're talking about the pi cycle top. We talked about the strength that we're seeing in the value days destroyed, meaning this is still fairly healthy in what we're seeing in the market. But then we also got the RWA, the altcoins. Guys, you realize in the last 163 days, the RWA value is up 52%. And this is just the beginning. I know I highlighted some version of this yesterday as well. We got to make sure, hey, that's right. You know what? Constitutional carry here in Georgia. I am strapped. But guys, I mean, I'm bullish as we could be. And then we look at the short-term holder cost basis. And if we're looking at this, basically the average price of every coin that's moved within the last 155 days. Very strong sort of bullish indicator of where we're at in the cycle. If we haven't, we've had some accumulation under this zone, but you can see large in part, this is another way of looking at that. This is showing when the price is under the short-term holder cost basis or above it. And when the price is trending below it, that's that bear market period in price action. But we've seen in this cycle so far, and this is where that bottom of the cycle was, FTX collapse, and then this whole period up. It doesn't matter if you can see this. This is what we're watching for here. When this is coming down, this has been a great opportunity. We're still at that great opportunity zone. And I showed that yesterday on the reserve risk chart, the on-chain data that we highlighted yesterday in yesterday's video. So I'm still very much of the opinion that we're in for some goodness, some goody good in this market cycle. Looking at the capital flow, this is going to go back to, because I have to click this 7 times for it to work, but that's okay. Capital flow, I've highlighted this several times. There's a weird pattern here that's presented in each one of these bull markets, but one is very, very similar. Looking back at 2017, we had a large capital increase. Basically, it's a money flow index, right? We're seeing money flow in, kind of double topping, coming back, resetting back to this zero line, almost negative each time when we're forming this bull market. Come back to zero again, a little bit negative. Now we get a lower high, now higher high, higher high, higher high. What do we see right here? That also, same thing here. We get that large impulse of money flow, back to the zero line, almost negative. Large increase in the money flow, back to zero, just touch negative. Now a lower high. Very similar structure to what we saw there. We even saw it in this fake out to the upside before the continuation up. The double top right there came back. Now we had the massive washout, but we had the lower high and the continuation. We also, guys, with what we're seeing in this market, with what we're seeing in the stackingness of what's happening in the ETFs and the corporate treasuries and the altcoin markets. The fact that this is such a similar setup, and I think it's over here. It's such a similar setup to what we saw in 2019. Let me double click here. I really do think we're getting that sort of amazing liftoff zone coming in this market here in the very near future. So when we look at Ethereum and we realize Ethereum is broken out of a multi-year trend line to the downside. See this very simplified chart. Broke out, came down, retest. Are we getting that continuation next? Well, let's look. RSI came back, retested where? Right at the 50 line. Still, with the drawdown, the strength is in control. The money flow is pulling back. Great, but that's on the 3-day chart. What does it look like on the 4-day? Money flow is expanding. Sorry, the 4-hour, I should say. Money flow is expanding here. Even on the 4-hour chart, RSI broke back above the 50 line, found a support on it, moving back up. Looking good. Link. I think Link is going to have an absolutely explosive run here. In inverse head and shoulders, we have a breakout. So even though I think there's going to be a massive move on Link, on the breakout, I'm watching for a little bit of a move down before we get that move. Got Aerodrome. I mean, right at this juncture here with this previous range lows, previous range high, right at it right now. The money flow is not agreeing yet, so watch that. But the RSI is back in the strength territory, back above this 50 line, kind of at a double top zone. So I'd be watching for something kind of like this and then the move, retesting this level right here. If we get that, if we get a slight pullback, that would be a gift. If we're able to break out of this without doing that, great. Then I'd be watching for where the bulls come in. Morpho. Just got another tweet yesterday from Coinbase about Morpho. We got a bit of a bull flag. That's 4 hours, go to 1 hour. Yeah, bit of a bull flag here, starting a breakout. So on that right there, we measure that out. You go like this, boom. Target on that would be $1.96. Excellent. Does the data agree? Well, the RSI, boom, broke up, came back, found support right around the 50 line, moved back up, higher low on the RSI, got it beautiful. Money flows up. However, we're getting a potential bit of a bearish divergence that could be forming here, in which case we'll see where the bulls defend. But it's feeling like the market is really looking for that next leg to the upside. Even dog to the moon, 1 hour charts. Nice rounding bottom here. Money flows coming back in. RSI's more on the strength side. We're getting a bit of a bearish divergence right here in the near term from where we're at here. These candles here much higher. RSI is a bit flat. So there might be an opportunity brewing for another buy opportunity for those of you that are trading. But when we look at this, we got a bit of a descending, look at that, descending resistance, kind of falling channel here. Let's let me move this out a little bit. Boom. Falling channel here. It's right on the edge of this. Look at this. Right, not only on the edge of this, but also previous range lows. So for me, I'm bullish, but I wouldn't be hurt if this pulled back down a little bit before it got a move to the upside. Look at that. On the 4 hour, money flows really took a swing to the upside. AVNT, highlighted this one in the chart, in the Discord the other day. Let me go over this other chart. Dang it. AVNT, where we at? So many charts to sift through. There we go. Boom. 1 hour chart. We highlighted this yesterday. The move up. We talked about a potential coming into this resistance line, potential move back down into the zone, retesting this zone right here. Price is actually coming back. It already did once. Doing it again. Are we going to get another lower opportunity? For me, I'm stacking opportunities if we go below the zone, especially below my buy zone, which is here, $1.11. Cardano. No, oh my God, look at this. Cardano making the run up through the zone. This is a zone we've had marked out for months, I do believe. Let me look. Yeah, coming back here to, since August. This zone right here, the breakdown, inverse head and shoulder, break up. A lot of the altcoins are looking like this, where we had the move down into a bullish reversal pattern. The breakout, great, but everybody gets lost in the breakout. Everybody sees a breakout and they think that means boom, it goes. A retracement in a bullish breakout does not mean it's not full bull anymore. In fact, it's part of the bullish structure. You want to see this 12-hour breakout. Great. Let's go down to the 1 hour and let's look at the price action. Okay, cool. We got the move up, but let's look for some sort of move down that retest a key level. or even further. Oh my God, it's breaking down, retesting a key level, because both of these zones, if it were to break out to either one of those, would still be a substantially higher low. Even if this came down into this zone, into the 80 cents, still a higher low. So let's look for the higher low breakdowns and the opportunities that might present. And Avalanche has been absolutely, setting up such beautiful price structure lately. The rounding bottom, the breakout, the retest back to the neckline. The post recently, I think yesterday, about bringing some more tokenized assets and stocks and stuff onto the Avalanche network, or being tokenized through the Avalanche network. Excuse me, I should say. BNB, beautiful also. I mean, just structure to the upside. But what do we see in this? Bearish divergence into this. We talked about a bit of a pullback. We're getting the bit of the pullback, pushing up. We're not seeing the strength right now. BNB was running while nothing else was. So it makes sense if we're starting to get some capital rotation or some focus on some other areas for a little bit, and this kind of forms some bullish structure, like potentially like breakdown. Oh my God, it's over. But then it bumps up, but then it breaks down. And then you form this beautiful bull flag that then gives you that next target to the upside. But you need to let it play out. You need to see a potential for a setup and realize that we do have bearish divergence on the money flow, on the RSI right here. So if we do get some accumulation formation here, shaking out some weak hands, forming structure that then gives you better indication that you can take a measurement and say, okay, our next target is up here at 1267. But let the structure play out, because we're seeing signs, we're seeing signals in the global financial sector, what we're seeing in the quantitative easing, the interest rate cutting, potentially even larger interest rate cuts coming at the end of October. I think we're in for some overwhelming bullishness to come in this market cycle. It's just up to you whether or not you're buying the dips or selling in fear or identifying the fear as buying opportunity. But I love you guys. I appreciate you guys. I got to go save my dog. I peed on my couch earlier. She probably did it again. I don't know what's up with her. But you got to give love, right? You got to grace to these other people in our lives, to the other dogs in our life, to the way we interact with the world. Sometimes life presents you challenges that you sit there in a moment of patience. And same thing with these charts. You patiently let the setups come. Be ready when those setups come so you can take advantage with a strategy, not with an emotion. But that's all I got today, everybody. I love you. Make sure, remember, channel partners, and I'm going to be launching some spaces, some audio spaces, so you guys can get involved as well on Twitter with Bitcoin IRA, one of our premier channel partners here. It's really stupid for any of us not to take advantage of the tools that are available to us to prevent some of the over losses that we're taking on not being smart with the strategy we're taking in trading. There's no reason why we shouldn't be, especially if you're here in the US, taking advantage of a Bitcoin IRA, because it's not just Bitcoin. You could trade up to 80 different cryptos that are out there. A lot of the top cryptos that are available, Ondo, Arrow, all these things that we're trading, you can trade and then rotate those profits into Bitcoin and not take a 20, 30, 40% tax hit on your short-term gains, which is going to result in millions of dollars in difference in potential profits down the line that you could have just given away to Uncle Sam because you weren't smart with your money. So call 1-877-936-7175 or give them a call or go to bitcoinira.com. Let them know Kelly Kellum sent you. Let them know Discover Crypto sent you, and they will take care of you. But I love you guys. I appreciate you guys. And don't do this for nothing. Make sure you protect your crypto so you can protect your future. GetArculus.com. Use code DC20 for the best unmatched security with the next gen cold storage. That's all I got, everybody. Adios.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.